Wall Street closes lower. The Nasdaq corrects over 1% as it falls for the fourth straight session, even as minutes of the December Fed meet indicate rate cuts in 2024, but fail to provide a timeline for the same. Stocks in the Asia Pacific trade largely lower, while the Gift Nifty indicates a flat start for the Indian market. Crude surges over 3%. Brent is now around $78 a barrel as tensions continue to rise in West Asia. Gold slips after U.S. Fed minutes signal uncertainty over the rate cut timeline. Cryptocurrencies to give up gains in reaction to the December Fed minutes. With less than 30 days to go for the union budget, inflation is likely to take center stage. Sources say government expects commodity prices to remain elevated this year, and managing prices is likely to be the big focus. The Union Defense Secretary expects a 5 to 7.5% increase in capital outlay for the defense sector in the budget. Giridhar Aramane promises that 45% of the government's defense orders will go to the private sector. Expects defense production in FY24 to cross 1.5 lakh crore rupees. That's an exclusive. And Bajaj Finance reports an AUM growth of 35% in the third quarter. For IndusInd Bank, advances grow 20% on a year-over-year basis, while Torrent Power signs 4 MOUs with the Gujarat government worth over 47,000 crore rupees. Hey guys, good morning and welcome to Power Breakfast. Those are the top headlines. I'm Pavitra and we have a lot to track on the show today. But first off, the handover from the US once again has, not been very strong. A little bit more profit taking has been seen, and it's largely led by what we've seen in the tech stocks. For Asia, we are seeing cuts to start off, and what's really leading the losses this morning is the Japanese markets. So the Nikkei index is down 350 points. I do want to point out that the Japanese markets are opening after the weekend. So they were off for 2 days on Monday and Tuesday, and we're opening after that New Year's weekend as well. So we are seeing a bit of a cut over there. For the rest of the Asian markets, there's not too much of a loss seen, right? So Hangseng is down, but just a little bit, just around 14 points there. Taiwan has actually moved into the green right now as well. Straits, Shanghai, both seeing, just a couple of points in terms of a loss. So not too much at all, in terms of what's going on with Asia. Just the Japanese markets seeing a bit of a cut this morning. The implied open for our own markets will come up for you. It is also indicating that the start could be flat to maybe a little bit higher. 22 points higher is where we're at on the Gift Nifty. Remember, we did end with a 150 point cut yesterday, so maybe a little bit of a muted start this morning as well. So that's what's happening across Asia. But let's take a look at the US markets as well, because like I was pointing out, Wall Street ended Wednesday's trading session lower. So the Dow Jones was down 280 points, the S&P 500 was down 38 points, and the tech-heavy Nasdaq composite fell for the second straight session this year, fourth straight session overall if you take a look at it, with losses of 1%. So just in the last 2 trading sessions, it is down over 3% on the Nasdaq index. Tech stocks were under pressure after the 10-year Treasury yield briefly rose above the 4% mark during the day as well. So that's important to track on the US 10-year. 3.92 is where we're at. But staying with the market, here's some important opinion coming in from JP Morgan Asset Management's David Kelly on the current market moves and where he really sees the US markets in the year to come. Listen in.
All that's happening is the economy is gradually normalizing, and this may be the last leg on the long road back to normal, but that's really what's going on here. So I think we're looking at moderate economic growth, but we had a lot of good news in markets packed into the fourth quarter of last year, and I think there's a little bit of a hangover from that going on in the first few days of the new year.
So that's an important word coming in. But something else that we're tracking from Wall Street, which is a big cue for the markets, is the December Fed minutes. They did show that Fed officials concluded that interest rate cuts are likely this year in 2024, but they did not really provide any kind of light on when that could potentially occur. So no timeline as to when we could see rate cuts. We have CNBC's Steve Leisman to get us all of the highlights of the December minutes. Steve.
And I'll cut right to the chase on these December minutes and tell you that to the extent there was a discussion about cutting rates this year, it was not a very robust, in-depth, or resolute or confident discussion. Fed officials saying that they did see the current policy rate at or near the peak in this rate hike cycle. The projections showed that most agreed a lower target range would be appropriate this year, as in 2024. But there was a high level of uncertainty around those rate projections, so uncertain, in fact, that it was possible the economy could require further rate increases, the minute said, or keeping the rate unchanged longer than expected. They did agree that it was appropriate to keep policy restrictive, quote, for some time. Now, a number of participants, this is a place where they did kind of hint at rate cuts, highlighted that there were downside risks from keeping the policy rate too restrictive for too long. And some said the Fed should begin thinking about when it might communicate the possibility of winding down balance sheet runoff, but that seemed to be far into the future and very, very obscure in terms of a comment. Now, more importantly, on the issue of inflation, the risk of inflation were seen moving towards greater balance, and they said it was clear progress had been made on inflation, but they underscored they needed more evidence to be confident that inflation was moving back towards the 2% target. There was some optimism about it surrounding, for example, labor supply and demand coming back into balance and housing inflation coming down. The labor market remained tight, but coming into better balance. The participants saw momentum of the economy as stronger, perhaps, than currently assessed. Now, there was a bit of an upside and downside to the inflation discussion. I'll go through it, and to give you one important point here, many remarked that the easing of financial conditions could make it more difficult for the Fed to reach its goal, noting that that yields had declined pretty substantially in the lead up to that December meeting. On the downside part, there were lagged effects of policies and potential weakening of household balance sheet. Just one more thing. The staff forecast, which is pretty important in terms of the Fed making their decisions, also saw continued upside risk to inflation.
All right, Steve, thanks a lot for getting us all of the highlights of the December Fed minutes. But with that, let's move on and talk about how all of the overnight global cues really impact our own markets and the individual stocks that could see big moves today as well. We have our research team here with the trade setup. Vivek and Hormaz join me now to really take us through what we should track from an India market standpoint. Guys, a very good morning to both of you. Vivek, coming to you first, the handover once again has been soft, so that profit booking continues on Wall Street.
Well, you're absolutely right. Third straight session where the Nasdaq saw significant selling pressure, and it'll be interesting to see, how the Indian IT stocks react today, given the fact that while Indian IT has been weak, for the couple of trading sessions that we've seen in 2024, a couple of upgrades have come in today morning. So it'll be interesting to see the tug of war, especially in the IT space today. Now, the US markets, like you mentioned, quite weak. Crude oil prices, key barometer that we track. Now, what's actually happened over there? Prices rose yesterday over 3%. So WTI futures, Brent futures, both up over 3% in yesterday's trading session. Now, coming to the Indian markets. Indian markets yesterday ended with cuts for the second straight session. Nifty, however, managed to hold on to the 21,500 level, and that will be a crucial level whether Nifty can protect that on the downside today. Broader market indices showed relative outperformance. India VIX cooled off, one positive sign if you could look at it that way. IT and metal stocks continue to see the weakness. A couple of stocks that did hit record highs. Bajaj Auto on the back of the buyback, was one of the top movers in the session yesterday. FI buying also is one key parameter that we need to keep an eye out for. Today, remember, earnings season kicks off, and it'll be interesting to see the kind of trends that we can pick up quite early. Key sector to watch out for continues to remain IT. Asian markets, Gift Nifty, soft opening for our own markets, but Gift Nifty isn't showing the kind of downtick that we would have expected it to see after the very weak handover that we've received.
Okay, so it's just around 22 points higher right now in the Gift Nifty. Vivek, thanks a lot for taking us through all of those cues. But let's also talk about the stocks that are likely to be in the news today. There's a whole lot, and Hormaz has got that with us. Hormaz, lots of Q3 updates coming in.
Absolutely, and they continue as we speak. And I start off with Bajaj Finance, where the new loans booked were up 26% to almost 98.6 lakhs. And the AUM growth was better than the September quarter, 35% AUM growth, and also crossed the 3 lakh crore mark in the third quarter there. IndusInd Bank also came out with updates. Deposits were up 13%, where advances were up 20% from last year. Also reacting to their Q3 updates today will be Ujjivan Small Finance Bank, IEX, and Vedanta. Bharat Forge will be in focus because the North American Class 8 truck orders were the lowest in 4 months for the month of December. They were down 7% year on year and 28% month on month to just over 26,000 units. Vedanta has received the bondholders' consent to restructure 4 of its bonds, and 2 of those bonds were due this year, it is in 2024, and 1 each were due in 2025 and in 2026. Now, defense stocks will be in focus today because the defense secretary spoke exclusively to CNBC TV 18, and he said that 45% of the defense ministry orders in 2024 may go to the private sector. So we'll keep that on the radar. Adani Ports, where Gautam Adani has now been redesignated as executive chairman from chairman and MD. Karan Adani will be the new managing director, and Ashwani Gupta will be the CEO. And the board has also approved raising 5,000 crore rupees via NCDs. SAIL, where the government has cancelled the disinvestment of its Salem steel plant due to the lack of interest from bidders. The October telecom data has showed that Bharti Airtel and Reliance Jio both added fewer subscribers compared to September, but Vodafone Idea lost more subscribers compared to the month of September. Wipro, where the lawsuit against this former CFO Jatin Dalal has been referred to an arbitration process. LIC has received yet another demand for GST and penalty. This time it's worth 670 crore rupees. Torrent Power has signed 4 MOUs with the Gujarat government worth nearly 50,000 crores. And BGR Energy, where SBI and Central Bank of India has classified this account as an NPA, and SBI has an exposure of over 2,500 crore rupees to this account. Back to you.
Okay, Harmas, thanks a lot for filling us in with all of that action that came through in these individual names overnight. But let's also talk about the cues from the futures and options space. Nigel is here with that. Nigel, we ended pretty much at the low point of the day, but above the 21,500 mark.
Well, that's right, Pavitra. Let's take that point forward itself. In the last few sessions, the lows that we're making on a day-to-day basis actually has been lower. So that chart should come up for you on the screen. Yesterday, we did see that the FIs, well, they added some short positions. Close on 7,000 short contracts is what they added. And that's why you saw the short positioning from sub 30%. That's moved to close to around 34%, because yesterday you had more number of shorts that were added and there was some unwinding of long positions as well. So currently the long positioning is holding at around 66%. The PCR, well, that was at around 1.2 just a few sessions ago. That's come down to around 0.76. Remember, normally we see when the PCR moves to around 0.65 to around 0.7, the markets see a bit of a bounce. Today, maybe at some point of time, if the call writing gets very, very aggressive, then in fact, maybe we'll be bracing ourselves for a bit of a bounce once the PCR breaches that 0.7 mark on the downside. Pull up 2 strikes yesterday, the 21,700 call, as well as the 21,600, as well as the 21,550 call. Both of them did add a fair bit of open interest, close to around 2 crore shares getting added out there. The premium out there between 25 to around 40 rupees, but it came down by close to around 40-50% intraday. So what are the levels you're looking at? The recent high, well, it's at around 21,834. But I'm looking at the 21,750 to around the 21,800 mark. That's a bit of a resistance zone going by the kind of call writing we've seen at around the 21,700 call. On the downside, support comes in at around 21,450. And that's because we have seen a fair bit of writing at around the 21,500 put. And if that breaks, then you're looking at the 20 DMA. The Nifty Bank yesterday defended the 20 DMA, but that's something that you'll want it to defend. And given the kind of global cues, you'll be counting on the Nifty Bank to fight for the bulls, if at all. The Gift Nifty suggesting a bit of green. I think at some point of time we moved into the red. And as I said earlier, say if you see a 50-80 point downtick, maybe at some point of time you see a bit of a short covering bounce that plays out just on an intraday basis. Back to you.
Okay, Nigel, thanks a lot for taking us through all of those cues and the setup this morning. But with that, we are going to get into our first short break in the show. On the other side, the Defence Secretary expects defence production in FY24 to cross the 1.5 lakh crore rupee mark. So we're going to bring you some experts from a chat that we had with him in just a bit. Hey guys, welcome back. You're still tuned into Power Breakfast. Let's bring you an exclusive now. India's defence production is likely to cross 1.5 lakh crore rupees, says the Union Defence Secretary Giridhar Aramane. Speaking exclusively to Parikshit Luthra, he also said that the government will divest stake in BEML at an opportune time. So let's listen in to some excerpts of that conversation.
At the current level, the private sector will be taking 40 to 45% of the total orders. It may not reflect on our statistics as we will show the contract-wise quantity. But ultimately, many subsystems, many components, many spares are being manufactured by private industry and the MSMEs mostly. We will wait for an opportune moment. Right now, BEML has got a major task on their hand. Once they complete it, they will reach a level where their share price will reach new heights. We are waiting for an opportune time to do that. We don't want to shortchange our family silver for immediate gains. So we are in discussion with the Department of Public Asset Management.
All right, you can also catch excerpts of this exclusive conversation with the Defence Secretary all day today only on CNBC TV 18. But moving on now to another important story. As the countdown to the budget begins, sources tell us here that inflation is going to be a big focus for the government. Timsy joins us with some details on this. Timsy, what are you picking up from sources?
as top government gets in full swing to prepare the upcoming interim budget. Sources say that as proposals reach the drawing board, managing inflation is likely to be the big focus. Sources further say that the government is concerned over high commodity prices and expects them to remain elevated this year too. Also bothering the government is fertilizer prices, which they feel is unlikely to give any relief. Apart from these, weather-related events could create more challenges for food items as well. Prices of vegetables such as tomato, onion, commodities such as wheat, rice, pulses are an area of concern which will remain to be on the top watch list of the government. Sources say that the current fiscal GDP and export targets will be revised, factoring in the economic fallout of Red Sea crisis, which is likely to have a decent impact. So let's see how the government manages these challenges while putting out the interim budget, which will be announced on the 1st of February. Back to you.
Okay, Timsy, thanks a lot for bringing us that important piece. But with that, it is time for another break on the show. On the other side, we're going to track all of the cues from the commodity markets. Stay tuned. We'll be back with that. Welcome back. You're still tuned into Power Breakfast, and let's now bring you some updates from the latest situation unfolding in the Red Sea. A group of countries led by the United States have warned Yemen's Houthi rebels of consequences unless they stop their attacks on the Red Sea shipping vessels. So the United Kingdom, Australia, Canada, Germany and Japan are among the 12 signatories. Remember, this comes after the Houthis claimed responsibility for another attack on a merchant vessel which was headed to Egypt on Wednesday. So that is the latest that we are getting out of that conflict. But Manisha also joins us to really take us through what's going on with the commodities and what this has meant for the commodities pack. Manisha, with tensions really, there's no signs of that abating just as yet. It's definitely having its impact felt on the crude prices.
Well, it clearly is. Even for crude oil prices, we have seen 3 to 4% of gains come in the overnight market for various crude varieties there. While the Red Sea tensions are keeping on the premium, there is also a shutdown of oil field Sharara, which is in Libya, and this is due to protests there. And Sharara produces nearly 300,000 barrels per day. So there are concerns about supplies now emerging, and that is supportive. Also, when you look at the U.S. crude inventories, there has been a decline of 7.4 million barrels in the previous week. This is the data that has come in from API. So we are looking at support factors coming in for crude. And as you rightly pointed out, because of all of this, there is pressure that we've seen in other asset classes. So there is decline in equities. We've also seen some decline come in for the metals as a sector there. Copper prices are now trading at around 2-week lows. We've seen sharp decline come in for silver and for aluminum as well. But another thing that has been surging is rubber. And I want to mention that because we've started this year on 1.5-year highs for rubber. There are concerns of potential supply shortages, and as the demand improves, the rubber demand is expected to be on the higher side, and the price is clearly following that.
Okay, that is what's going on with the world of commodities. Manisha, thanks a lot for bringing us that quick update and wrapping all of that up for us. But with that, we are going to wind down in this edition of Power Breakfast. Thanks for tuning in. We have Bazaar Morning Call on the other side.